Let's see, Matt Schuler here. Ace Champion.
I'm here.
He's here. Alderman Bill Morgan.
Present.
Eli. Eli, there we go.
I'm here. I'm here.
Perfect, and we can hear you too. And Kathy Hinkfus.
She's not here. Where did I record?
Kathy's not here. Okay. Let's move right into the agenda.
Recording in progress.
We are now recording. Let's move right into the agenda for this morning. We'll get rolling. We've got 2 items. I'd ask for an approval of the agenda for the October 13th meeting of the Community Development Revolving Loan Fund Committee.
I approve.
We have a motion. Ace, was that a second?
That was a second, sorry.
Perfect. We have a motion and a second. All those in favor say aye.
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 And then our first order here will approve the minutes from the May 5th meeting of the Revolving Loan Fund Committee. Do we have a motion for that?
I make a motion to approve the minutes.
We have a motion. Do we have a second?
Second.
We'll have to take the second there from Eli. We have first from Alderman Bill Morgan and a second from Eli. All those in favor say aye.
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 All right. Let's go right into our first order of business, which is a loan request from Gina Tax Solutions LLC for $225,000. And Wendy, are you going to open up this one?
I am, and I do have our applicant here this morning. And I wanted to introduce Gina View. She's the president and owner of Gina Tax Solutions LLC, along with her business partner and daughter, Jasmine Yang. And they're applying for $225 in community development revolving loan funds to purchase a building at 1546 and 1538 Western Avenue here in Green Bay. Gina Tax Solutions is currently leasing an office suite at 1742 East Mason Street, which is no longer really meeting their needs with their growing business. She had a 2-year lease, which will be up in November of 2023, which is why they're looking to purchase a building and expand their services. In addition to the general accounting services that JTS, or Gina Tax Solutions, is having, they're expanding their business to incorporate a business incubator. She's realizing that there's a need in the community for businesses that are supporting female-owned businesses and Hmong-speaking entrepreneurs. Gina was a refugee and has survived many hardships to get to this point in her professional career. She is building on her life experiences to support others that want to work towards a better future for themselves. The new property purchase includes 2 buildings. One will serve as the office space for the accounting business, and the second building will house the business incubator that she's beginning. This property was recently used as an office space and is move-in ready for JTS's use. Including the loan, in the loan packet, you'll see property descriptions, financial projections. She has also a primary lender, which is WIBIC, which is the Wisconsin Women's Business Initiative Corp. Their letter of commitment is there. They are going to be committing $150,000 to this project, and all other documents required for the loan application. So we've gone through her taxes, we've gone through her proposals. She's worked with a number of organizations within the city, and she's worked with Small Business Development Center out at UWGB, has reviewed her business plans and her financials. So we've really incorporated a lot of resources to help support her in her journey. It helps that she's got a financial background to be able to have that as her business focus. But we'd like the committee to review that, and our recommendation is to approve the loan for $225 for Gina Tax Solutions.
Just real quick, Wendy, WWBIC, is it a state program?
Yes.
Okay.
So as early, just to give a little bit of background to this committee, because it's really important, there's a couple of, they really focus on a lot of startups, which is great. far back as not real long, like in the 70s, you had to actually a woman could not get a business loan. You had to have a male sign for a business loan. And Wisconsin was very much on the frontier and said, hey, this isn't quite right. We know that there are a lot of opportunities in our community that we would like to support. And so they developed WWBIC as a lending solution for having women entrepreneurs get business loans without having to have a male signature. And it's really not in our far history that has recently happened. So that's how the beginnings of WWBIC came in to play. And and I just think that's a kind of a nice story that it's circling around and helping supporting businesses like this. But they also support other businesses without the community. You don't have to be a female, you don't have to be a minority business. They help all businesses, but their main focus is women and veteran and minority businesses. With that, the interest rate is a little higher with WWBIC. Typically, it's in the 9th percentile range. But you also get a mentor with your loan. So they have somebody that works with you, and so in your loan portfolio, you also get a mentor person that works with you and helps you through it, and they have over a 90 percentile success rate. So they do not have much of a failure rate, which is really great. So they really become a partner in your business, and it's a strength. And we're seeing more and more startups and them become very active in that arena. So we're working with them closer. They have an office now at NWTC in the incubator there, but they are Milwaukee and regionally based, yeah.
And have we had another loan come in front of us from WWBIC?
Yeah, we have. We just recently saw Bamboo.
They were with that
the
program?
restaurant had WWBIC as well. So if it's in the startup arena where they're, and now Gina has an established business, but still is kind of fits into that category of a female entrepreneur, and it fits her business model very well. So this lending scenario, Eli probably has other things to add as far as, that's his, he's a lender, and so maybe he has other thoughts about that, but that's a little bit about her primary lender and why they're participating and how they're participating and how that lending structure comes in. But they get classes and certifications and all kinds of support through their lender.
And what's the loan they're doing was $150,000, and what were the terms on that? And I remember you said something about 9% on interest. What was the length of the loan?
Yeah, let me grab that real quick here. I just want to make sure I'm quoting it accurately. So the loan will be the following. They're putting $10,000 in for equipment. They're doing $20,000 in for software, advertising, and promotions, $40,000 in for leasehold improvements, and $80,000 for working capital. So that's the structure of the $150,000. They have the note will be for 1.25 for the terms of 96 months. There's a fixed term note, 3 months for interest only, and 93 amortization, 93-month amortization.
Got it, so 8 years.
Did you want me to go through the monthly payments or anything, or, okay?
No.
But roughly that gives you the loan structure for that. And this is out of their Milwaukee office, so.
Okay.
Yep.
I then would suggest we open up the floor, so Gina and/or Jasmine can both address it. So I'd make the motion. We open up the floor for comment. Do we have a second?
Second.
We have a second from Alderman Morgan. All those in favor say aye.
Aye.
Aye. Okay, I don't know who would like to talk, but we'd love to have someone, and, feel
can
free
come
to
right
come
up
to the
here.
podium
You
or
can
sit at the table,
Okay,
whatever most
I'll stand
comfortable.
here. I'm
For you.
fidgety.
And we'd just love to hear a little bit more about the business. We'll probably ask some questions. but
Sure.
How long have you been doing the business? What got
Sure.
you into it? So we'd love to know.
Okay, so again, thank you for having us here. Thank you to the committee. I have been a mom majority of my life, I would say 32 years. And so as a mom, I have been realizing that there's so much juggling to do. And then not only that, but I love numbers. So it started out with doing taxes for myself, and then I'm like, oh, I did my taxes, and then one family member heard, and then two family member heard, and soon, every tax season, the kitchen was filled, the dining table was filled with people. And when Jasmine was one, I remember having her, that was when it started getting really crazy. She was 1 year old, and I'm holding her on one arm and doing, talking to people about tax in the other arm. So that was really cool to have Jasmine. So she was pretty much had no choice but to come along with me on this ride. So the business itself, I started back when Jasmine was one, and then it was just at home. But then what really made it an impactful decision for me was when COVID hit. I didn't want anybody anymore in our kitchen or in our house. So then we found an ice shanty, and it was a pretty cool ice shanty. And what happened was then it was $1,500, I remember, out of pocket that I had to use. And then we renovated, so it just looked amazing, like a cozy home, and had a little heater in there. And you know, tax season is always so cold. And so we put the ice shanty in the driveway during COVID. And people would park next to the ice shanty and come in. And then, so no one would go in the house. And that was what really was in fact. And then all of a sudden there were opportunities for us to go back into the community, people to go back to work. And the grant, that the $10,000 grant was available for us to go in and lease a place to, go back into business. So I initially thought, oh, that would be great. I applied for that, and that was wonderful. They didn't ask any questions. They just wanted to know how long I was in business. And boom, I got a check, found a place to lease. And so we have been leasing at 1742 East Mason with that grant. And all we did what we did was put down payment, our 2-month lease, and bought some cubicles, got stove and refrigerator, because we knew it was winter time and people were going to come. And so one of the things I noticed with the business is that and throughout my whole life with the business, that I have a guest house. When I do taxes, people are visiting us and they need food to eat, and people have questions, and most of the time I'm counseling. And so this is where it came to the point where Jasmine and I going, I think we need to expand this. We need to grow this. And so the tax business no longer just does taxes anymore. We have found really good services that people need, and that's basic accounting, bookkeeping. They need a champion to help them with solutions to grow. And that is like, oh, I see that you've been doing this for 2 years. I've been becoming a business coach. And so we're learning to tap into that, and we're learning to invoice people for our time. And so our income has gone from basic tax solutions to bookkeeping to payroll now, which we love. We like doing payroll. Our payroll service is growing, our bookkeeping is growing, and so is our champion for our customers to grow their business. And we're getting such a great response on that, because I have over so many years of experience. I have an MBA in business. I work right now currently with Horton as CPA. I'm a senior accountant there. My goal is to eventually, once we move into our new building, is to do this full time. And then Jasmine, she has her bachelor's in finance. She's going to go back to get her CPA. That's what I want her to do, but I'll let her do what she wants to do. But she's going back to get her master's this coming January, and then we'll be able to really grow. This is a long-term decision, a long-term chance for us to make the difference. The one thing that we realize why we're going after all of these is that we are so alone. And if we don't go out and get financing to help us grow, we need to get employees in. We need open, during tax season, we need to open 7 days a week. During non-tax season, we need to open 5 days a week. We need a secretary, we need bookkeepers, we need CPAs in there to help us, guide us. We need senior accountants, and mostly someone needs to be there all the time, because we realize that tax season doesn't end April 15. The people that really need our service are after April 15. The people that are avoiding filing their taxes for 6 years are the people that show up after April 15. And so we want to keep our doors open, lights on, people answering the phone, and we want to serve the community. Our competitors are huge, they're massive, they're online. We just want people to walk in, have a cup of coffee with us, enjoy some deli if we can, and then grow their business with them. So we're gearing towards business services more than anything, and helping people grow there. So I think we're excited about this opportunity. We've had a lot of financial growth, but we also had a lot of financial education within the two of us. And the reason why I brought her on board is she's such an amazing partner that I could have discussions with her openly, and we could have unconditional discussions about no hard feelings. If she said something to me, I'd be like, oh, I take it as a learning lesson, and for her too. She's able to just know me so well that as a partner, I'm so glad to have my daughter as my partner in this business. So overall, I think that's pretty much it that we wanted to express and put down for the community to hear about us and our growth. So.
Anybody have questions?
Looks like.
Yeah, I got a question. Gina, what's the current rent you're paying right now versus the monthly payments for this, for the property?
So yes, and that's a great question. Our current rent right now is $1,500.
Okay.
And one of the reasons why we wanted to grow out is that we want to be able to also provide and have someone near us to go along with us in our goal and serving our clients. So yeah, so we want to be able to incubate them and also provide service, which is for their time with us, they can help us with rent or other source of income to grow together and be a part. But yeah, so it's $1,500, and going further, they want us to sign a 4-year lease with an option for another 4 years. They want us to stay 8 years. And so our only option is then to definitely go and buy something if we're going to be there 8 years. So
Okay.
that's what our landlord is asking us to do after November.
Eli, did you have anything else?
No.
And just so I understand, you would be purchasing with this 2 buildings, correct? And-
Yeah.
And it looks like when I looked on the maps, one's pretty big, one's
Yes.
much smaller, probably a
Uh-huh.
third of the size of the
Yes.
other. Is it the big building that'll be the tax services, the smaller one, the
Mm-hmm.
incubator, or is it the other way around?
It would be the big building, the square building. If you look in the map, is our goal to go in and just take over and have
Okay.
about 8 offices in there with employee center, coffee for us. And then the Long Center, we would love that to be an incubator. There is currently a church there now.
Okay.
We could, they can be there for us to provide the service that we need, which is to guide and have a safe place. Our goal is to have a place where people want to come there. And so if the church wants to stay, I don't feel like we're gonna be able to force them out. We want to help them grow too.
Okay.
Help them maybe, and then it's an Hispanic church too. So it'd be partnership more than having someone leave. So it's all up in the air. The great thing is that they will also help us in paying our loans and getting the business growing. So we're pretty open to tenants of different cultures.
I was right.
Go ahead, Bill.
Well, I thought part of Eli's question was asking the difference, what the rent is compared to what your
Sure.
payments are gonna be now?
yeah.
I didn't really get this, what the difference would be.
Yes. Wendy had asked me about that, and we went over that, and yes, so the payment will be, the WIBIC loan will be about as much as the current rent will be, and then the city loan will be about another, so it'll be double the size, so it'll be $3,000, but we'll have tenants to help us with our portion, so by the time we're done with paying for taxes and insurance, we still will, our portion will be about $600 to pay for the loan. Yeah, so it will be double.
So 600 more than
Yeah.
1,500?
Yes, but our net income for the last 2 years has been very, very in the positive. Last year, we grossed about $180,000, and we had to pay tax on 70. So we're using our money effectively.
Wisely.
Yes, yeah. So we're able to take on another, $3,000 on our own if we don't have a tenant. So we're okay. And that's where we feel positive, so that we, on our cash flow and the services that, and this is not advertising. We don't go out and say, hey, Gina Tax Solution will do your taxes. It's all word of mouth. So our goal with our funding is to definitely get our website going, get advertising promotion, because we want to open all year round. And we need to get the phones ringing, so we need to get, some ads out there, and just be known in the city of Green Bay. So once we get that, our income's going to quadruple. And we need to hire people to answer the phones and provide services, bilingual, multicultural language services in the area.
And I do see you did supply the tax returns for the last couple of years, which
Yes.
they're satisfied with that, so that's great to hear.
Yeah, it's been quite a growth. The one lesson, like I said, since we had a growth, it was a matter of budgeting, how we're gonna get our bills paid, and so, yeah, we learned that last 2 years so that we can be able to take on loans and manage that cash flow. Then that's what Jasmine's great at, she's our cash flow person. It's very conservative.
And Wendy, then a question to you. What term, when you had discussed like a $3,000 a month payment on the city loan, what were you talking about, kind of terms and
So-
length and?
That's exactly what Stephanie, the accountant, would like to have brought forward. At this point for point of record, is that we would go at a 4% interest rate. Because we're tying our funding to the building,
Yep.
we typically would go in a 20-year amortization.
Okay.
It's up to the committee if there's going to be an interest-only period, but for the most part, it would be just a fixed term note for 4% for 20 years.
Okay. And that was kind of thinking along the same lines, and I don't know if there's been anything discussed with you about doing interest only for some period
Yes.
at the beginning to help improve cash flow and what you'd be looking for there.
We would like to ask the committee to consider that, because our tax season doesn't start till January, and that's where we want to, for the last so many years, I use every dollar I can to get to tax season, and that's where the money is. So whenever you have, no money, and you have a chunk of money, you're always playing catch up. We don't want to play catch up anymore. We want to put that in reserve, and then cycle it through, and always be not rich, but be comfortable, not stressed out. Because around this time, the liability insurance due, the building insurance is due, the tax software updates are coming in. They cost money every year. So this is where I'm like, we hardly have Christmas, and my kids always say they have Taxmas. Because that's when income comes in for the business. So yeah, so I'm like, sorry kids, there's no Christmas this year because the software cost me $6,000, and that was your Christmas money. So for going forward, we want to be not stressed out about in cash flow.
Celebrate Christmas in May.
Yeah, yes, we do. Yeah, yeah.
I would like to make the suggestion that we do it at 6 months, because we do offer up to 24 months, but I think that, just to get them true tax season would put them at a strain, because I think the Rivic one is also 3 months. So if we can make it to the end of tax season, I think that would be beneficial for them.
Definitely.
So I would just suggest, for accounting purposes, to go 6 months.
6 months.
And then they always have another 18 months that they can use years down the line if they need to, because they can do this twice.
There's always unforeseen moving expenses when you're
Yep.
moving from
Right.
one location to the other.
Yes.
And it sounded like from what you wrote in the things that the building is moving already.
Yes,
It's been as an office, so you don't
Yes.
have to do a bunch of leasehold improvements or anything
No,
like that.
yeah.
Okay.
Yeah. I like to glass off rooms, so, because I feel safer when we're glass off, but that's the only thing we're gonna do, is glass off some rooms, so that first, privacy, second, safety.
Yep.
Yeah, so.
Any other questions from anyone in the group? If not, then I'll make a motion. Anything that you want to say yet to the committee?
Well, one thing I'd like to also mention is that we have not written an offer yet. And so far, there's nothing moving, but we will keep everybody posted. Once we get a commitment from the committee, then we will write the offer, okay? So just want to give you a heads up on that.
If there's no other questions, then I would make the motion that we close the open session and go back to regular business.
Second?
So we have a motion and a second. All those in favor say aye.
Aye.
Aye. You're good.
Thank you
can sit
very
back and
much.
we'll kind of go through the motion here. So we've gone through it. I don't know if there's any other questions or comments from anyone on the committee. And if not, I'd certainly be open to taking a motion on the loan. I'd make the motion then that we do the $225,000 loan, 4% interest rate, 20-year amortization with the first 6 months at interest only. And then the guarantees on this that were contemplated were what? We're
We'll be
first on the
taking it.
building,
Yeah, we'll be a first on the mortgage.
first on the mortgage, okay.
And then she'll have to do also job creation according to the HUD guidelines.
Which I saw in here was projected as 8 FTEs, and how much is required with this size of loan? I'm assuming it's not 8.
It's not, it's just like 6. So it's
Yeah,
one for
something
every
like that.
35,000.
Well, because you have to be 51%, so it
51%.
would have to be 5
Yeah.
out of 8.
Okay, so it'd be then with 5 FTEs created,
LMI FTEs.
LMI FTEs created.
I'll second that.
So we have a motion and a second. Any questions or comments? Okay, all those in favor say aye.
Aye.
Aye? Anyone opposed? Nope. Congratulations.
Thank you.
You're getting along. And we wish you great success. And I know Wendy will follow up with you too.
I was going to say, we met them with the Bounce Back Main Street grant, so they got the $10,000 to open their bricks and mortar from their ice shanty. I love that story. And then moved on to the bricks and mortar, and here they are purchasing. So what a great success story. That's exactly what that grant program and everything was about. Thank you, ladies.
Whatever
So,
cross streets good, that's it.
so our next item,
Where moving to?
Yes.
They're just off of Western. They're bounded on the north side by the railroad tracks. They're just behind the Aldi.
Oh, okay.
So it's Western
Nice.
and Mason? Or no, Western and Military, right? Okay.
Okay, between military and Fisk.
Yeah.
Good luck.
Thank you, thank you.
Great, okay. Let's move to our second item, which is consideration with possible action on a request by the Legacy Hotel to increase their community development revolving loan from $150,000 to $250,000. And big shocker, we're going to hear here, costs have been higher in a construction-related project.
that's right. So unfortunately, the city has funding available at this time for this project, and the maximum revolving loan fund, community development revolving loan fund cap is $250, so they came in conservatively at $150. And kind of with all their projections, of course, the hotel project is costing a little more than originally anticipated overall. You know, and they will not have any problems creating the positions. They're getting close to opening and are noticing that they just have a gap to close towards the end, and are asking the revolving loan fund committee to add an additional amount of $100,000 in a new loan for them. The additional funds will go towards furniture, fixtures, and equipment purchases, which is what we did the first time. We did tie it to the mortgage, so we just we just tied it to the property. This is the same use as the previous request. They will be required to create 8 new full-time equivalents in total, with both loans put together, just as the reporting happens. 5 of those will have to be low to moderate income positions. This would have the same terms as we did before. We did a 4% with 10 years amortization. I guess, you know, just verifying that we would follow the HUD's guidelines, and the loans would be secured with the mortgage and personal guarantee from the borrowers. I do have Dennis Doucette on behalf of the Hotel Legacy to give you information. They are planning on opening on November 29th, so about a month out, so it's looking pretty good over there.
Okay, I would actually suggest then we open up the floor, so Dennis can give us an update on where things are at. Do we have a second to that?
I will second that.
We have a motion and a second. All those in favor say aye.
Aye.
Aye. Dennis, if you want to, and you can take yourself off of mute, would love to just get an update on the project and see what's going on with Legacy Hotel and give us an update on what's been going on with construction costs and your anticipated opening would be great.
Well, thank you very much. I wish I could have been there this morning with you, but the project has been going along nicely. We are set to open. We will actually do a very soft opening on the 22nd, but we're not going to be opening to the public until the 29th. Then we're going to have simulations, the week of the 22nd through the 29th. During that time frame.
Well, Dennis, you just blew that. You're on open record now. The whole city's going to know.
Oh well.
I'm teasing you.
Great advertising.
But, we're very excited. I mean, the hotel is going to be spectacular. I invite, everybody at this table to contact me if you want to tour the property beforehand. I'm happy to do so. And yes, shock and awe that we were over budget in construction. I think almost every construction project in the country right now is over budget. We did anticipate some price points coming down after the pandemic and the supply chain issue had died down. That did not happen. As a matter of fact, everybody kept their prices right where they were, even with the supply chain issues being lessened significantly. However, the good news is that leisure hotel rates shot up after the pandemic subsided, and I expected those to go down. They have not, so I'm delighted. So on the business side, there's a big positive there as well. But I'm here to answer any questions you might have in regards to the property or the opening date, etc.
And so right now you're anticipating opening right at end of November, and so you'll pick up part of the Packer season. So I'm assuming you're going to kind of go from soft opening to really, really busy very fast.
Yes, we are, and we can't wait, in all honesty.
Good.
Matter of fact, from the month of December, we're going to have an extraordinary number of grand opening events during that time frame. But you're right, right after that soft opening simulation period, we move right into that first game with the Chiefs. And then we have a game with the Bucks on the 17th, and then we also have a game with the Bears on January 7th.
Excellent. And have you started your hiring process for the hotel, and are you running into any challenges there?
I thought we might, but we have not. We just had our job fair this past Wednesday on the 11th, and we had a great turnout. We received over 70 applications online. We received another 30 during the job fair, and we're feeling very good about staffing. I think it's always an advantage for the new kid in town grand opening to attract applicants, and that's the case with us too. And I'll be very honest, we really are striving to be the employer of choice within the hospitality sector. We're offering top wages, and I think that goes a long way. And I think there's also some excitement, working for a brand new hotel too.
Well, that's really good news. I was a little bit afraid you might say, ooh, hiring has been a real challenge.
It hasn't. It really hasn't.
That's great. Anybody have any questions for Dennis while we've still got the floor open? And just from terms then on this loan while we're open, in case there's anything we need to chat with Dennis. I think I had it. 4%, 10-year. Are we writing a new loan, or do we just modify the existing?
I'm just going to create a new one.
Okay, so we'll actually see two loans then on
Technically
sheet.
3,
Three.
because we had one for the
Economic
city,
development.
economic one.
Yep,
yes.
okay. Got it. And so 4%, 10-year, secured is first on the mortgage and then a personal guarantee.
Will that be a first on the mortgage, or will be on the mortgage somewhere down in the
Okay.
capital stack, because we're coming in late to the party on this particular loan, and so it will be wherever we end up in position.
Sure. Okay.
But
I just want to stipulate that while we're very appreciative of what the city's doing for us and helping us with this project, it's our intention to pay off all three of these loans within the first year. And it's not that we don't appreciate the 4% interest, because we honestly do. But at the same time, it makes more sense for us to have those loans refinanced over a 25, 30-year period as opposed to 10.
Sure.
And they've been making their payments regularly, no problem with the other two loans.
Yeah, and we never object to fast paybacks. I just figured with the overall interest rates, Dennis, you might like having these on the books for a while, so, great.
Well, I would if they were, if the amortization period was longer, yes, I'd be open armed to that.
Got
But the 10-year period, we're actually better off with a 7 or 8% rate over 30 years than we are with 4% over 10.
Okay.
The main issue with your operating budget is to keep your annual debt at a reasonable price point.
Okay. Are there any other questions while we've still got open comment period here? If not, then I'd make a motion. We go back to regular business.
Second.
We have a motion and a second. All those in favor say aye.
Aye.
Aye. Okay, we're back to regular order of business, and I'd certainly be open for a motion on the loan for the Legacy Hotel.
I make a motion that we approve this loan with the requirements of the rate of 4% for 10 years and the creation of the new jobs.
Do we have a second?
Second.
We have a second. We'll take that one from Ace on that one. So first from Alderman Morgan, and second from Ace. Any questions or comments? No. All those in favor say aye. Aye. Great. So the loan has been extended. Congratulations, Dennis, and we're certainly all very much looking forward, to the opening of the hotel. Very excited about the property that you're adding to the city, and hope for great success for Legacy Hotel as well.
Well, I can't thank you all enough. It's much appreciated, and my offer to conduct tours for any of you is sincere. So Wendy has my contact information. Just let me know if you want to come over and take a peek.
Sounds great. Thank you very much.
thank you.
Okay. Our next then is the revolving loan fund status report.
Yeah, I'll take that one, unless Stephanie wants to.
Oh, I
but,
can.
Yeah,
That was in your packet. We currently have 17 active loans, not including the 2 that you just approved today. Our current outstanding balance is just a little over 1.4 million. And on average, we bring in about 21,000 a month in repayments. Everybody is currently up to date. We did have a little bit of some growing pains with a couple of them, getting set up and on with new payment schedules, but everything's been running pretty smoothly.
Yeah, and it looked like I saw there was one that had just paid off and finished.
Pure Clean paid off early. They
I think they sold his business, yeah.
Okay, awesome.
and we have gotten a couple of requests on payoff amounts, so I don't know if people are looking to refinance or truly pay off, but I mean, it is the nature of loans.
Okay. And given the 2 today, so 225,000 for Gina Tax Solutions and another 100,000, what's available yet?
Through our program income, we have 397,000, and our HUD reserve, so the money that's held in HUD's
Yep.
bank account, is a little over 100,000. So we have enough money to cover both these loans.
Okay. And some yet? if
Yes.
Something else comes in. Okay, great.
I also wanted to share real quick on the list that General Vet is progressing very nicely. That was one of the ones,
Yeah.
item number 15, that they're right on track and planning to open on time. And Bamboo is up and rolling and had their grand opening and everything as well. So thanks for the committee on those couple that just projects updates. And
Yeah, I was
obviously
telling
Legacy.
Stephanie before the meeting started, my kids discovered Bamboo.
Oh.
back in August, and they're pretty hooked.
Oh, that's great. I guess that's all we have for the updates for that, but
Okay.
I'm getting a lot of applications right now, which is exciting.
Good. Well, then I would make a motion that we adjourn. Do we have a second?
Second that?
Motion and a second. All those in favor say aye.
Aye.
Aye. Meeting is adjourned. Thanks, Wendy. Thanks, Stephanie,
Thank
for
you,
all
everyone.
your hard work on this.
Recording stopped.
Thank you.